Welcome to Drumbeats, the must-listen-to podcast which explains why Indigenous partnerships are the key to securing successful outcomes in natural resource and infrastructure investment in Canada. I'm Mark McNack, and with me is my co-host, Rob Brandt. And this is our second podcast in a two-part conversation with Jeffrey Sear, founder and managing partner of the Raven Indigenous Outcomes Funds, the team pioneering outcomes-based financing in Indigenous communities. In our first podcast, Jeff took us inside the origin of Indigenous outcomes financing and showed how Raven raised tens of millions of dollars, delivered community-led projects, and kept investors coming back. Today we go further. Jeff breaks down what makes Raven fundamentally different from other outcomes funds around the world, where the biggest investment opportunities are emerging in the Canadian Indigenous economy, and why international capital, from the US to Europe to Asia, is now knocking to get in. If part one proved the model can scale, the second episode explores the next wave of measurable impact. Let's dive back in. Outcome-based finance obviously has some precedence internationally in the US and I think Australia as well. And of course, London is a home for impact investing. What makes Raven different?
Yeah. Look, I think leadership in England and Denmark and make home capital in the States. So Bridges, the Denmark stuff on type 2 diabetes, which we'll also have one investment that'll be ready to go early this year. And make home capital States and Bridges in the UK have funds. Why is this different? I think it's the way that we center community. And we look at the community priorities and develop with them what the intervention is. Because it's not always straightforward that, first of all, each community is different. And so you need to be cognizant of what assets they already have and what assets we need to bring as part of the investment to make it happen. That community-centered part is probably what saves all the investments at the end of the day. Because investments always get into little hiccups and barriers and bumps. And it's your relationship with the community and the community's desire to lead it and see it forward. That's the thing that sees the investment through to the end of the day. The second thing is we don't let the capital determine what the investment is. And sometimes in some outcomes-based funding we've seen, especially in one-off projects around the world, the capital is telling you what they're going to do. And here's the issue I can sometimes get into with government commissioned outcomes contracts, which the UK does a lot of as well. I think it does great things. But I think the responsiveness and building resilience in communities where we need to be globally, economic structures, and that sort of thing we've seen through COVID and financial crisis and trade war crisis, whatever you want to name, that community resilience is really important. So it's a different way of doing it, and it's a different way of valuing the outcomes. From an Indigenous perspective, like maybe this is why we led them. If they want to start with elders' homes, yeah, do that. That's important for a number of reasons. So responsive listening, putting the management capacity in the community, supporting that, leaving it there is really critical for us. And we're not seeking extractive returns. So there's a limit to what you can do with outcomes financing, and I think what you should do in terms of your return profile for investors. Don't get into this, if you want to be driving Lamborghinis at the end of the day. This is not that sort of financing place. But you can do a lot of impact in community through it, and investors can get a decent return. And we can talk about how the return, I think, works for investors if you want, like how I think it's, in my experience, as to where that's going.
Well, sure. Let's talk about that. That would be great.
Yeah, and this is learning by experience, because when we first did this, I wasn't sure how investors would respond, right? But as we went through it, and the due diligence process with investors, exhausting as that can be, the investors themselves started to respond to it because they want to put it in their portfolio, and they needed to know a way to think about it. Like, what asset class is it really? Like, what is it? Like, they're trying to structure into things that they know, right? And it kind of breaks some of those models.
Yes, absolutely. Right. How do we fit it in the box?
Yeah. And so what it turns out, it was a CIO somewhere who said this to me, I can't remember, said, well, you know what? It looks and acts and feels like a fixed income instrument. Yeah. If you're getting your return in 5 years, And it's a 5 to 7% return profile that looks and feels like a fixed income product. And of course, we secure the outcomes purchasing before we do the contract, before we do the work and the investment. So then you've decreased the risk profile on it. This, I think, has appealed in a time of uncertain liquidity in VC and PE. It's appealed to the investor class in a way that I didn't really anticipate at first. I thought maybe I was Pollyannish. I thought the impact would appeal. But as you start getting into the investment discussions, it's both. You needed both, right? And I think also it's a unique, like Indigenous investment vehicles are few and far between. If you're not doing resource extraction or infrastructure, like big infrastructure builds, how many Indigenous investment vehicles are there to you? So I think like I said, we picked up momentum from the institutional class in the last 4 or 5 months. And I think getting to the final close is not going to be as difficult as I thought, potentially, a year ago. So, because the interest is very high, a lot of it coming out of the US, frankly. And I think it would appeal to European investors as well. If you think about it like a fixed income product in an Indigenous space, makes good sense. It makes good sense because you're front line on climate change, like your front line adaptation work. And I think that gets people excited. There's room in the fund. I know if there's investors, if there's the Robs of the world listening to this podcast and they want to get involved, our website, ravenoutcomesfunds.com, or Jeff at ravenoutcomesfunds.com. I'm happy to give up my email address, not my phone number today, but the email address. And folks can just reach out. And we have a couple European investors. We have a slew of American and Canadian investors involved.
I was going to ask if you've had interest already from overseas.
Yeah, from Switzerland and Germany in particular. But I am also, it's expensive to run around the world and get in front of investors, which is why podcasts like this are. So like the exposure is important because people don't know what they don't know. Correct. And we're very small. We're a very small firm. So, to advertise is tricky. And there's a lot of competition for capital. And if you're not AI, competition for capital is tough, right? These days.
But you've got a really unique structure, maybe a unicorn. If you're able to combine impact with security and a secured return, that's a hard product to beat. And I know there are some limits, you said, on what you can do, but there's endless demand, I would have thought, in Canada for that kind of investing.
Yeah, I think people are becoming aware of it, to your point. And I mean, we haven't had the fund out, like it's just over a year. It got a little slowed down to fundraise, I think, for a couple of reasons we're all aware of these days coming south of the border, which made a whole bunch of investors just pause for a bit, not make certain decisions, which is exactly what happened when I was raising funds during COVID, which is exactly what happens during financial crisis. Like you just pause. The money still wants to find a home and still wants to earn on itself. So at the end of the day, it's started to open up. And I think people are looking for a different type of investment that feels solid.
What other kinds of projects do you see in the pipeline?
So one of the big ones that we have, it's very well developed. We're just waiting to complete the outcomes purchaser side. It's a type 2 diabetes remediation initiative. And we've been working on it for a number of years. And so this actually sat with our foundation for a while because it needed to develop, because type 2 diabetes outcomes are a little more complicated. But the science isn't. The science has actually been well known for 50 years. And we now know that Ozempic won't solve the problem of type 2 diabetes. It can assist. It's just a tool in the toolkit. But what you really need to do is change behaviors and change access. So where diabetes programs have failed is that they're not culturally built by the community to be executed in the community and owned by it, which is what we did with Wasagamuk First Nation, a Northern Manitoba First Nation. The rates of diabetes in those communities, in our communities, are extraordinary. They're bad in mainstream society. They're 3 to 5 times as bad in
Yes, I
Indigenous
recall
society.
that.
And if you're under the age of 25 and you're a First Nations person, you have an 80% chance of being type 2 diabetic in your lifetime now. Okay. The costs for that are extraordinary. So in the communities, this is the former, it's called the Asininu Nation now, but it's the former Island Lake region in Manitoba, Northern Island Lake regions, where you need lots of data on this stuff. These are very data-centric models. Yeah. We know that this year, approximately 90 to 95 people will be diagnosed with type 2 diabetes, newly diagnosed. That represents $25 million of cost to the healthcare system. Those 90, there's 1,600 other people with that type 2 diabetes, those communities, by the way. And every year you'll add 90 more. And those numbers are not going down. They're increasing and they're getting into younger populations. So when you stand back and if you think of systems investing or systems thinking, if you want to do it that way, that driver far outstrips clean energy and adaptation. It is such a massive cost driver. And healthcare systems can barely keep up, and Indigenous people, especially remote Indigenous people, are not getting service anyways. So this project, which we call the Minoayawan type 2 diabetes reduction, which means living the good life, is very specific training and teaching. We work with Western University. We built curriculum and program, employing local people to be life coaches, as I think the shortest word to it. I don't know if it's a great word, because it's about culture, food, diet, exercise, the intermixing of that, and mental health on top of it, right? And so it puts together a 3 to 4 year package that will reduce type 2 diabetes in a couple hundred people in that community and save radical amounts of money just by managing diabetes to stay where it is. Never mind bring it down.
Yes.
Just get it stuck in place for a minute here and not drive up costs. And so that's one of the projects. We're working on solar. We're working now on air source heat pumps. We are looking at a very interesting biochar. If you know what biochar is, it's taking organic waste, so food waste from municipalities, organic waste from like forestry and agriculture, and you turn it into char. It's not by burning, it's by actually a condensing process. So it turns into fertilizer. So we're looking at something there. It looks interesting. So we get approached with a lot of different things. We have to make the outcomes argument for our fund, and some of this stuff is very easy to do. So our investment thesis is to increase the well-being of Indigenous people and Mother Earth. So we put those into the mix, and there's a lot of things that we can do that are really interesting. And we're also looking at scaling, and we're talking to the Carney federal government about scaling our work on outcomes-based finance for the government as a whole, to start thinking differently about how it uses public dollars. So we're kind of trying to move the market to where we can have much larger funds and much larger investments. I think, though, that the investments will not be like $200 million. There'll be a series of $5 to $10 million ones that work at the community level, but there's just a lot more of them. And you'll get that impact that way. So it's kind of scale by breadth as opposed to by depth is where I think it goes. Because that big money is out there on infrastructure, as we know. There's lots of big spending there. So we don't need to be there.
Right. And coming back to the outcomes, the security of the outcomes is because you're consolidating federal and provincial programs that are designed to serve one person at a time, but you're able to go and put together and say, how do we take this program and scale it? And that's how you get your guaranteed return. Is that correct?
Yeah. And I don't like to use a guarantee, but I like to say as an outcomes purchaser, based on us doing our work well and verifying the outcome. Guarantee is too much, a step too far for me and for them, I'm sure. The way that works is 3 ways, though, just to be clear. One, we either guarantee the outcomes purchase on an individual investment. We're going to do 50 houses here. We're going to do solar. We're going to do retrofits. And you get the government department to sign an outcomes contract with you, and they'll repay Raven, blah, blah, blah. The second one at scale is both CMHC and Efficiency Manitoba really want to see this work forward. So they pooled capital with us, 20 million, 10 million pools that we can just draw on, which is great because it gives the security of we can keep the investment train going, right? You can just keep doing the
Right. And that's because your reputation, because you've delivered for them. So now you're a trusted partner.
And the process is like, it's very transparent. Like if you get
Correct.
into our data room, you'll see our process. So, and the third way to do this is through a much larger sort of what I call a macro approach, which is what we're trying to do with the federal government now. Let's get on a macro scale. We don't need to hold the capital at Raven. In fact, it's better if they do to some degree. Let's say you do $500 million. Federal government puts this in a red circled fund. They keep the money, but they agree to buy outcomes on a contract by contract basis, sort of centralized, agree to buy the outcomes. And then you've market built at that point, right? So it's not just Raven doing it. It's not just Raven outcomes out there. It's Joe Blow here, there, non-Indigenous, of course, can do it, which is where you want to go. So that, to answer your question, Mark, there's three kind of methods towards it that seem to work.
Yes. Really exciting. What a great thing to wake up to every day. Oh, how am I going to save the world and help the Indigenous communities, right? That's a great way to start your day.
Yeah, I don't know if I wake up every day thinking that. Mostly I'm like, what about that investment memo? Where's that at? Yeah, that's the typical stuff people worry about.
Yes.
Is that taking up your full time, Jeff, these days? Did I read you traveled maybe to the Vatican? I don't know how recent that was.
Yes. Yeah.
Tell us about
that. Yeah, I had met the Pope and the new Pope. The Vatican, that was in November last year. It's my second time there. The Vatican has something called the Laudato Si, which is the former Pope Francis wrote about how do you invest for people and planet, like for common people and planet. And he was trying to move not only Catholic institutions, but religious, faith-based investors, which is, by the way, a massive pool of capital globally, very massive, from Islam to Judaism to Christianity. There's a big pools of capital out there towards investing differently. That includes the impact investing space in particular, right? Because you're looking for impact. That isn't just a return. And this past fall was the new Pope Leo's sort of affirmation and kind of refining that and kind of building that out. So what they were looking for is, I guess, innovative solutions to getting that impact globally. And of course, there's a history between Indigenous people and the church that I think, good hearts and good minds at the Vatican are seeking to address. I mean, institutions like that don't move awfully quick, but they are moving. So I was invited along with others, a couple other Canadians who were there, but lots of people globally who are looking for new. And we were there to kind of share our experience and where we thought it could go.
Fantastic. Great honor and great opportunity to be speaking. As you said, they move slowly, but they do move. And
yeah,
Earth is obviously very important. We all live here. There's nowhere else we're going.
Yeah. And like some tech evangelists, I don't think we're quickly going to populate other planets. Maybe one day.
Well, see who takes them over first.
Yeah, I think there's an alignment globally that we understand, I think, from the investor community to a degree, that we have one planet. It's a limited planet, and we need to find ways to work within those boundaries. I think we're doing a small part of that, trying to do a small part in that. I'd like to see the institutional capital, and some of it, ESG investing is a thing. I don't always think it's as detailed as it could be, as robust as it could be. But moving towards it, people may be a little shocked about the sort of incoming trade war and what's that done to certain investment theses out there. But I think folks haven't let go of the idea that you can invest for good and still get returns in a better way. So I don't think that's going anywhere. It may not be talked about as much, but it's not going anywhere as far as I can tell. But people can prove me wrong.
No, I think this is, south of the border. There's many things I guess you don't talk about anymore, but all things pass. And for the rest of the world, it's still very important. And what you're talking about and the issues you've raised about community and power to communities and how do you give control, and that's happening everywhere, including in the UK. How do we get the whole country going? So what you're saying has a lot of relevance for just outcome funds in the UK and what they're trying to do and shift communities.
Yeah. Outcomes Fund in the UK have some very cool investments, by the way.
Yes, they're
If you
all
look into
over.
them,
Yes.
They're very interesting, yeah.
In a global gathering like that, Jeff, did you come away? Where did you think Canada sat in the global world of whether it's impact investing or the Indigenous economy generally?
I think in the Indigenous economy, let's do that one's first. I'm closer to it. Canada's definitely ahead of the curve in a lot of areas. I think, why is that? Relationship of Indigenous peoples, hard fought relationships. We stand on the shoulders of giants, our ancestors. When you talk about legal decisions, Supreme Court decisions, Truth and Reconciliation Commission, stuff in the Constitution, and then when, I would say it's a decade ago or more, I can't put a firm finger on it, when Indigenous people were moving from surviving to thriving into that space. And then when we originally did Raven Capital, we were the first globally, which I didn't know at the time. And a little shocked because Canada's not the home for really big capital. You know what I mean? So, but I've seen it take up globally after the fact. Like I've seen there's not a lot, but there's been some that's occurred. So I think Canada has a leadership side on the Indigenous economy because the importance that plays in the social fabric of Canada too. And I think folks like yourselves and others said, yeah, we should be doing more. And it's a black mark on our history. And it's only good for all of us if Indigenous people in Canada do well, economically, socially, spiritually, whatever we want to think about it, and good for the planet. Globally, though, there's been some interesting moves afoot. There's been some innovative stuff coming out of the US in pockets, Indigenous-wise in pockets. So you take New Mexico, that area, take Portland, that area, take south of the Great Lakes, Minneapolis. There's some very interesting funds like the Indian Collective, Alwista CDFI. You take these things that are going on there, and they're starting to move the markers. I thought interesting. Globally, not as much. New Zealand has some interesting, but they approached us. And I think I'm heading to Australia in March by invitation to speak to a group on how to do things a little differently. On the global economy, which is your broad question, how do you think Canada sits? I think respected in the global economy and pragmatic about certain things. I don't know if we're seen as risk takers in the way that, this is me just musing here openly on a podcast. So don't take it with a grain of salt. But I think we have a lot to share and to bring forward globally. And I think the more investment we invite from Europe, Asia, like you take Singapore and you take Dubai, you take and London, the big financial centers, and the more investment we bring into Canada, the more exchange of ideas we have, I think the better we're going to be for it, and the more we can share and learn. For example, I didn't know that Qatar was one of the biggest owners of Canadian ports. That's really interesting when you start thinking about how mixed we are globally in these things. I don't know. I don't even think I came close to answering that question, Rob, but do with it what you
No, your perspective is, it's certainly in line with our experience.
Yeah.
And it's individuals like yourself, leaders, Indigenous leaders, that I think make the Canadian space unique. So thank you for all.
We're trying to drive things.
You do.
Yeah.
Yes.
I think I'd be really interested to hear what your viewers, listeners have to think or say. If there's people who are interested, super open to having conversations, super opening to do a follow-up if that's required, if people want to dig into it. Our website is really instructive. It's newly done just the last year, and it's kind of helpful to get your head around it. But I think outcomes finance is another tool in the toolkit of addressing socioeconomic inequalities, redistributing power, redistributing wealth, so we get better outcomes for society. So that's where I'd kind of leave it there.
Yes. Okay. Well, we have had good conversations over here and are having conversations with the Impact Investment Institute and other groups here who are really interested in becoming aware. As you said, there's not this same degree of awareness one would think of what you're doing and others. And given it's such a home for green finance and ESG and these other issues, the city's starting to take a look and think, okay, we need to be doing something. And with the change in leadership in Canada, the change in leadership south of the border, it's a whole new world. And it's these common values that will drive those who want to remain, fighting together in the good fight to make every community, every country, and our part of the world that much better. So I think there's a huge opportunity. Hopefully, we'll have you come over to the summit this year. It's the 3rd annual summit. I think you'd find there's a lot of useful conversations. It's been great to meet you, Jeff. Great conversation.
Well, Jeff's here, founding and managing partner of the Raven Indigenous Outcomes Funds. Thanks so much for your time. As I said before, thanks so much for all you do, innovate, and make a real impact to Indigenous communities around Canada. Yawan.
Yeah. Marcy, Joe, thank you both. Thanks for the invitation.
Thank you, Jeff. Thank you to Jeffrey Sear for sharing his insights with us, and thank you for viewing and listening. Mark your calendars for the upcoming 2026 summit taking place on the 8th of April. Be sure to share, subscribe, and leave a review on your favorite podcast channel. Thanks for listening to Drumbeats. Until next time.